Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the macro view for BTC, what I think is happening and what I think is likely to happen next. We'll be taking a look at the on-chain metrics, or to have a look at Elliott wave theory and some smart money concepts and give our thoughts and opinions on where I think things are going. As I get into this video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one though, and what we'll do is we'll start off by the usual, which will be the on-chain metrics. So we'll start up here. So let's just kind of review. It's been a couple of days since I kind of looked at this, so here on Saturday we should just reflect on anything major that has changed. What have we seen? Well, top right hand corner we have inflows, outflows, and then a difference between the two of those, right? So on the inflows since the 1st of January 2023, we can see 2.5710 million Bitcoin going onto the exchanges. We can see 2.5425 million coming off the exchanges, meaning that there is 28,500 more Bitcoin gone onto the exchanges this year than has come off. Now, this is important because this is the balance between supply and demand. If we think of the inflows as Bitcoin being made available to sell, that's your supply line, and then you have the demand taking it away from the exchanges. Right now, the supply is outpacing that of the demand, which is the technical term of a bear market. Okay, so at the very top level here, we know that since the 1st of January, so pretty much the first quarter of 2023, it's been in a bearish state. It's actually quite neutral for a long stint at that. If you're familiar with the channel, it's been just hovering around a little bit negative, a little bit positive, and we actually had a bit of a surge recently with a lot more Bitcoin going onto the exchanges being made available to sell. This is also visible over here where we can see this little surge upwards. We're coming back down a little bit as a little bit has come off over the last couple of days. We can see that the net change difference over a 30-day period, each one of these bars is a 30-day average of the inflows and the outflows, and a difference between the two of them, essentially this number on the right hand side, but 30-day average of it. And we can see that, you know, we're above the midline. This is not a good sign. It basically shows us that over a long period of time, more Bitcoin has been made available to be sold, rather than being seeing a lot of demand coming in and taking it away from the exchanges. Now, this is important to think about because the very much the narrative right now is that we're in a bull market, we're going to a moon, $1 million in 90 days, all these kind of really stupid things that are going on in the space, right? They're illogical and don't make a lot of logical sense. And we're seeing a lot of FOMO action. So what's being represented in the on-chain data is exactly the opposite. You're seeing some people take advantage of this naivety in the space. And what you're seeing is a lot of people actually making their Bitcoin available to be sold and selling it to the unfortunate retail investor who thinks that we're going to the moon. Okay, so we know that these things are really interesting. And of course, you know, that's my kind of 2 cents on it. I'll leave you to kind of come up with your own conclusions. I go through a lot of data and I think essentially the history of Bitcoin doesn't give you an accurate representation of what is going to potentially happen in the future. Just because it's happened twice before does not mean it's going to happen again. And specifically when you've got different variables that have happened this time around than what was going on in the previous 2 cycles, you cannot think that we're going to be repeating ourselves with new data. It's a very foolish thing to be thinking. I mean, you can't expect to get different results with the same data, but you can't expect to get the same results with different data, essentially. Okay, so it's important that we understand that the variables are very important to the price action and an analytical point of view. You also have to consider that these indicators are not going to give you that. They're just algorithmic. They're looking at a bunch of candlesticks and showing you a bunch of average prices, for example. And just because they've reacted previously under certain circumstances, now those circumstances have changed, you cannot expect them to react in the same way. So although there are indicators out there that are saying, look, we're in a bull market now, I'm edging on the side of caution because it doesn't make sense that you're in a bull market with an economy that is on the cusp of a massive collapse, right? And I know Bitcoin was kind of created to kind of hedge against these things and to kind of do all those kind of fantastic things about banks and all that kind of stuff. However, I think you've got to consider who has money to actually be investing right now, and it's not really retail. Retail is struggling worldwide, and we're seeing inflation and things go up. So when we start seeing that there's more Bitcoin being made available to be bought, we do have to consider who is buying and who is selling, right? Very, very critical that we kind of think about that. And we don't just kind of say, look, we've got a candlestick that's going upwards, green in the market, fantastic, we're going to the moon. We draw a trend line, yeah, it's bouncing from a trend line, fantastic. You have to consider, okay, who's buying, who's selling, what's the psychology behind it, why are they doing it, and what does the impact of the currency pair that you're actually looking at mean for BTC, right? $1 million Bitcoin only is really possible if you have hyperinflation, and you're not going to want to trade your Bitcoin for a worthless dollar anyway. So it doesn't matter if Bitcoin goes to $1 million at that point, because, well, it doesn't really matter. You don't want the dollars. You wouldn't make that trade, okay? And you saw this with USDT, for example, USDC recently, where we actually saw the depegging of USDC created the USDC pair for Bitcoin surge up in price. It was significantly higher than the USDT price. And this is because you wouldn't necessarily want to make the trade for Bitcoin to USDC under those circumstances, unless, of course, you're really confident that USDC was going to survive, which obviously it pegged back up and it was all good. So that was a fantastic trading opportunity. But you kind of get the idea. If the US dollar were to become unstable and devalue, and hyperinflation just devalues the dollar completely, and, Bitcoin goes up to $1 million, you're still not going to make that trade from Bitcoin to USD, because that $1 million is still only going to be worth maybe $27,000 as it is today, right? So you have to understand that there's a balance to be made, okay? And we can't just be thinking that the dollar value is actually a meaningful amount if the dollar is actually being devalued at the same time. This is a complex subject matter, and it's not as simple as just drawing a trend line on a chart and saying that we're going to the moon, okay? So let's come back into our data here. We do know that there's more supply being made available to be purchased, and that is not a positive sign. Ultimately, everything comes down to supply and demand, very key metrics. Right, moving on. Before I continue to rant. As we can see here, this is basically the line graph of the inflows and the outflows, and we have seen a spike up here with withdrawals. Okay, so we can see there's a bit of spike to the upside with withdrawals, but everything over the weekend usually cools off and goes down. So why the weekend is basically just retail investors kind of, doing FOMO things. But essentially, when the week comes around, you start seeing these massive spikes again, okay? So just be aired on the side of caution over the weekend. I did put a video out this morning with my expectations on where I think price is going. Check that out if you haven't done so already. But essentially, for this here, we can see that, yeah, it's pretty typical. We can see that there isn't terribly too much going on differences-wise. Numbers are reasonably close, but we have surged up a little bit here, as you can kind of see. We had 70,000 going onto the exchanges, 65,000 coming off. Over this side, of course, we have 41,000 going on, 52 coming off, and so forth, right? So there's a balancing game to be had here. Now, as I move over into the wallet counts, this is where things get really interesting, right? One of the things that we need to understand is that retail, generally that the person who works the 9-to-5 job, right? They don't generally have a lot of disposable income, specifically with the inflation, the way that it is going. The cost of living is just skyrocketing, right? We can see here in the UK, inflation has jumped up again, and the US, they did change their metrics. I think they stopped looking at it over a longer period of time and actually cut their data differently recently. But that being said, from the CPI data and that side of things, I do see that inflation in the US is not going to be reacting positively to the recent lack of action from the Federal Reserve, right? And I know they're in a tight spot. They kind of are going to either destroy the banks by doing the interest rate hikes that they need to, 0.5 or higher. Alternatively, they keep to 0.25 and they just grind this thing out for a very, very long time. And I think it's going to be a very long time if they do not actually grow a pair and do what needs to be done, which is essentially destroy jobs, destroy the banking sector. They kind of have no choice at this point because of the amount of stupidity behind the administrations for printing so much cash in 2020. They created this whole entire situation. Then they compounded that by selling the bonds to the banks and then jacking up the interest rates, which devalued the bonds, right? So this is all kind of all in their wheelhouse. This is all the things that they've done, and all they're now doing is kicking that can slowly down the road. At some point, it's going to have to implode. And that has profound effects to the crypto market, right? So when we start thinking about who has the money to buy, well, if they actually see worldwide, where we see that interest rates at 0.5 or 0.25, you're seeing that jobs are getting squeezed. People are going to be losing their jobs. They're not going to have the funds to invest. You've got the cost of living. Everything's going up in value. Well, everything is actually costing more, but actually it's the same kind of items that you're paying a year ago for half the price and all that kind of stuff, right? So we know that cost of living is increasing, inflation is increasing, interest rates are increasing, and as such, there's an incentive here not to spend money. You're going to need to hodl it, right? You're not going to have the money to invest because everything costs so much more. So when we start thinking about these things, we have to understand that there isn't a lot of money to flow in from the retail side. Okay, so the retail side just simply doesn't have the funding to kind of push this to those $100,000, $200,000 BTC levels, right? Assuming that hyperinflation just doesn't come in, right? So if we assume that essentially, it's going to be just a 2.25 and it's going to just drag out for the next 2 years, recession, depression, all that kind of stuff, right? If we just see that, and there's no hyperinflation and Bitcoin is just going to slowly kind of grind. And the reason for this is that the retail isn't going to be able to FOMO in. Retail isn't really going to be able to invest in the market, because they're going to be squeezed. Their funds are going to be squeezed so tightly. So that brings me to the wallet counts, right? And we can see that retail investors are FOMOing into BTC. And this is a recipe for disaster, if you ask me personally. Now, you can see here we have Bitcoin dust, right? This is essentially a wallet that has over 0.01 Bitcoin. Okay, so if there's someone out there that has over 0.01 Bitcoin, they're included in this count. There are currently 11,715,136 wallets that have over 0.01 Bitcoin in them. Okay, now we can see, in fact, I did see a tweet the other week where there was like someone was claiming there was 1 million wallets created in a single day, Bitcoin to the moon, and I can't see that data. So if there were 1 million wallets created in a 24-hour period, they had less than 0.01 Bitcoin in them, right? And so we know that, right? We can see that within this data. So we can see that this has been growing. It's been growing up quite a bit. And this basically tells us that small, very vulnerable retail investors have been slowly trying to invest in Bitcoin because they think it's their saving grace. And that's really sad and unfortunate, because that's not how I see this market playing out. So here we can see some unfortunate souls that may actually come to significant difficulties on the back of what might actually unfold. So sad to see it, but it's been growing. Now, as I come over to the other retail investors, we have three different size wallets here. And unfortunately, in typical retail fashion, they've been doing what retail investors do best. FOMO in, right? The fear of missing out on something. And they've been buying on the green days, and that's never a good idea. So here we can see we've got Bitcoin Krill, which essentially is a wallet that has over 0.1 Bitcoin. We have the Shrimps, which are over 1 Bitcoin, and Dolphins over 10 Bitcoin. So we've got retail investors work 9 to 5. They have some disposable money there and throwing it into Bitcoin. They're trying to build a position. You've got the 1 Bitcoiners, people who aspire to build a wallet with at least 1 Bitcoin in it, and they've achieved that, and it's fantastic, right? Then you've got the high net worth individuals, 10 Bitcoins or more. Now, essentially, all of these wallets act exactly the same way. They overreact and they're emotional. Hence, I dub them retail wallets. Because essentially retail investors, they act emotionally rather than logically. They don't look at the market and think, how do I navigate this and profit from it? Instead, it's oh my God, I'm going to miss out, I must buy. Oh my God, it's going down, I must sell, right? And you can see this within this data very clearly as well. Just recently as well, right? You can see right here, okay? At this point here, they started selling. Retail investors started selling here on the 13th of March, right? Price was at $22,000, right? And then at the bottom here, where it's $24,000 on the 15th, they start buying again. Okay, so you can see that this happens quite a bit, unfortunately, right? They keep buying the tops and selling the bottoms, and it's very consistent. You can see this all the time. As you see it over here, sold at 22,000 and then started buying at 24,000. Over this side, we're selling at 24,000 and starts buying at 28,000, right? So this is a typical retail investor thing, right? Oh my God, I made a mistake, I sold, I need to get back in my position, so I'm going to miss out on all these gains, yada, 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 right? They don't look at it logically of the fact that there's always another opportunity, right? If you've made gains, you've made gains, and you want to try to mitigate against making losses, right? However, if you continue to FOMO in because you're acting emotionally about these things, unfortunately, that never ends well. So, and this is a clear example of retail here, literally just we're missing out. The bottom is in. We're going to the moon. I must buy it, right? And it's typical retail things. And unfortunately, the money that they've currently feel that they've got available to invest is going to get squeezed, and they're going to have to look at coming out of their positions at some point in the near future in order to sustain their current livelihoods and the way that they're currently kind of their lifestyle, their current lifestyle, right? And this is a couple of things that are kind of compounding this thought process, and that is that we see that savings accounts are dropping down to all-time lows, right? There's a significant number of people, I think it's like 2/3 of the United Kingdom with less than £1,000 in savings. And then on the flip of that, you've got credit card debt soaring to all-time highs, right? These two things are very, very dangerous. So if they've got individuals in here who have invested in cryptocurrency because they believe that's going to save them, they've got no savings and they've got credit card debt, how are they going to pay those bills when Bitcoin doesn't go to the moon and Bitcoin doesn't hit those highs? Because nothing goes in straight lines. There's always a healthy corrective structure at some point after a very significant run upwards. So if you've got credit card debt at all-time highs and savings at all-time lows, that money is going to have to come from somewhere in order to pay the credit card bills. So, that's just one thing, just that we're noticing within the data, but we're also noticing the inflation and everything else, the cost of living, and all these things compound together give you a very bleak outlook for the future of BTC and people who are investing in it. But as I said, there's only really retail investors that's going to affect, because high net worth individuals are not, or high net worth individuals are not really necessarily going to feel that kind of pinch right away, right? And likewise, when it comes to the institutional level wallets and the billionaires, right? The multimillionaires and the billionaires, they're not going to feel cost of living rises as much as the retail investor. And that brings us on to the next three wallets, right? Sharks, which are over 100 Bitcoin per wallet, Whales, which are over 1,000 Bitcoin per wallet, and Kraken, over 10,000 Bitcoin per wallet. So we can argue that these are the guys that are driving the market in a direction, right? If they want to buy in, then we're going to have to see someone sell Bitcoin to them, and then these guys are going to try to take that price up higher. And this all comes down to supply and demand. If you've got a lot of whale wallets and a lot of Kraken-sized wallets and a lot of shark-based wallets holding and not selling their Bitcoin, then there's less supply for people to buy. Less supply for people to buy and an increase in the demand, or the increase in the people wanting to buy, would actually create this situation where price spikes upwards, because demand and supply, right? It's a very careful balance, right? If you've got a squeeze on your supply and demand increases, price is going to go up because people feel that they can charge more for their assets. Likewise, when you've got too much supply and not enough demand, price goes down, because essentially everyone wants to sell and they want to sell it before anyone else, just in case it goes down lower. So they're going to keep lowering their prices until, of course, it gets sold. Everything comes down to supply and demand. So what do we see here with these three wallets? Well, we can see that the sharks are our traders. These are professional level traders. They've done a fantastic job recently of buying just before the pump. So they bought it back in December. They rode this bad boy all the way up, and they started coming out of their positions, as in they were selling their Bitcoin to the retail investors from the very top, right? And we can see that they kind of spiked up here. See the price action in January was 16K. They stopped buying massive amounts here. They came out, they pushed back up, they come out, and they're basically just trading Bitcoin. And their ambition, or their target, is to basically grab as much liquidity as possible. Okay, so sharks have been doing a fantastic job of this recently. You can see that they had a spike up here at 16,138 wallets, and then they come down here at 15,999 wallets. Now the whales are your just manipulators. They just love to go for the liquidity, right? And they're not short-term movements. They're not following the price action like the sharks. These are basically, if I buy and hold it here, I can push the price up here. I can get some liquidity from these locations and so forth, right? These are the guys that are unfortunately the ones that you need in the space. They're an unfortunate necessity. They are the people who are going to hold and hodl a lot of Bitcoin to the point where when demand kicks in, price surges, right? And you can see this within the charts just on Smart Money Concepts here. Every one of these green areas is usually driven from one or two or maybe multiple institutional level investors, right? These gaps that are left behind here are created from what they call institutional candles, and these institutional candles are created from a buy order that was so large that it couldn't be filled within this gap, and price had to jump up higher in order to fill their order. Okay, now it's unusual that you see these things getting stacked up like this, because that's not how an institutional investor would normally operate. This tells me that things are maybe moving in an unnatural way to the upside, right? So we know that we need whale wallets, we need whales to participate, we need the money from these institutional and billionaire players in order to really drive that price up higher, because they're going to hold such a significant amount of the supply that they can control how much of that actually seeps into the ecosystem and how much of that is available to be purchased. The Kraken-sized wallet is that on steroids. Okay, so when it comes to the Kraken-sized wallet, this is 10,000 Bitcoin or more, and these guys are literally just absolutely taking the piss. And let me show you what happened in 2018 right here. Okay, now these guys, whoever the hell they are, they decide that they're going to just basically accumulate during the bear market, and then just before you kind of see this little moment here where retail investors are getting scared, they decide they're going to flood the market with excess Bitcoin, dragging the price of Bitcoin into the bear market low. Now, I bring this wallet up all the time because it's very critical in wallet to the future price predictions and the future of BTC, right? Because if we take a look, right, at 2018, they just accumulate all of this time period, right? They're buying higher, and then you assume that they're selling down lower. They're not necessarily selling. They're just making it, putting it onto the exchanges, making the supply available, dragging the price down lower, right? It's very typical kind of strategies that you see, specifically in the traditional space. They're very well known now, where you put kind of fake orders in and to make people believe that there's a huge whale looking to sell at a certain level and that kind of stuff. One of the things that we do know is that all of these wallets just suddenly just dropped off a cliff and then started accumulating again after the bottom. Okay, so we can argue they sold it, we can argue that they did something else with it, whatever. We can also argue, I guess, that it was sold to the whale investors, or moved to the whale investors, right? Pushed to the exchanges and then transferred over to the whales, because there's a huge spike here during this moment. Now, obviously, there's buyers and there's sellers, right? So if whales were buying here, well, we have to see the retail investors selling, right? So retail investors during this flat period have to sell their Bitcoin to the whale investors in order for whale investors to be able to get into the market, right? Without someone selling their Bitcoin to whales, how are they going to enter into the space, right? You can't just create it out of thin air. Someone's going to have to sell that Bitcoin to them, and whales have been historically selling quite a bit. So let's go ahead and take a look, right? So the whale wallets look like this, right? This is a 365-day view, right? So the bottom was in June. I'm not sure if you heard this, right? A lot of influencers were saying that the bottom was in June, and I was sat here saying, well, I don't know how, because the whale wallets were selling, right? So this pump from June to August, the whales were selling into it, right? So historically speaking, and logically speaking, a whale needs to be able to sell their Bitcoin to someone who's willing to buy it, right? So if there's a bottom that was in here and there's a move to the upside, or someone's selling the Bitcoin to the people who are accumulating, and it happened to be the whale wallets right here. But of course, you know, I was saying that it doesn't make sense that the whales are buying or selling the bottom, and therefore June can't possibly be the bottom, right? It doesn't make sense that June would be the bottom and whales would be selling the bottom. That wouldn't make sense. So then obviously a new bottom comes in November, right? FTX. And what do we see here? We see a continuation of the same trend, which is that the bottom is in, theoretically, according to many people, not myself, but to many people. And we can see that the whales continue to sell. They continue to sell into the bottom here. So question I would ask is, have they made a mistake? Are they, in fact, selling the bottom, and maybe, we're all in the wrong, and, retails are right, and these billionaires, what do they know? They didn't gather their wealth through knowledge. That's just foolishness. So we can obviously see here that the bottom came in June, the current bottom anyway, and we can see that these guys continue to sell. But they didn't stop there, did they? Price pumps up, and they double down. They come down even more. Right, and they continue to come out of their positions, which means that this move to the upside, all that accumulation from those retail investors, has come on the back of your whale wallets, right? But we can go further than that. We can also take a look at the Kraken-sized wallet over the 365-day period. And what do we see here? We see accumulation during this bear market. We see accumulation through this bear market, and yet to see any flooding of the system with excess Bitcoin. So if history is to repeat itself, if anywhere, it's going to be in the psychology of the players and participating in Bitcoin. I do not believe that just following a few algorithmic indicators following some price action and candlesticks on a chart are going to help you understand what's actually going on. I think you need to look at the people who are actually sat behind it, making those trades, the buyers, the sellers, and how they are reacting. Following the money seems to be the most sensible, in my opinion, right? So we know retail investors are coming in. We know that whale and institutional investors are coming out, and that's a recipe for disaster. So let's take a look at the price action. What does all this mean, right, if we wrap it all up? Well, we can see that we have some short-term bullishness, right? We can see that. I'm not going to sugarcoat it. To me, it looks like we still have that potential move upwards. We have a change of character right here. It's not a confirmation yet because we need a break of structure as well to kind of confirm it. But, you know, on the daily chart here, from a smart money concepts point of view, it does look like we might be getting this idea that there's room upwards yet, right? 30K hasn't been hit and lots of people want it. There's lots of liquidity up in 30K, no doubt. So is the price going to push up there before correcting? Possibly. But I would honestly just highlight that on a bigger macro scale, does it matter? I don't think it does. We can push up to 30. We could push up to 35 for all I care. One of the things I'm pretty confident on is that we are going to have to come back down, and we're going to have to come down pretty hard. And there's a couple of reasons for this. One, we have all these imbalances in the order books. Very unnatural. It's very unnatural that we have them kind of stacking out like this without some kind of major corrective action. The other reasons is if we take a look at Elliott wave theory, where we can obviously see that is corrective action required. We have no trend structure upwards. We only have this potential theoretical move to the downside, right? And we can argue that maybe there's an expanding in here, but I think our wave 3 doesn't meet the requirements. Let me just check it, just for sanity's sake. A lot of people think there's a diagonal down here, and they go 1, 2, 3, 4, 5 diagonal structure. That's kind of the idea. However, this wave 3 has specific rules, so let's go ahead and just check those. I've done this a couple of times already. I just want to sense check it for my own peace of mind more than anything else. Yeah, the wave 3 is the smallest, and that's not allowed. That's an unbreakable rule, so we can't do that. There's no diagonal there, and there's no leading diagonal, there's no expanding diagonal, there's no contracting diagonal, there's no diagonal here. That means it's corrective, which means this entire thing here is corrective to the upside. It is not doing this 1, 2, 3, 4, 5. Or 5, wherever you want to place that. That's not going on. That's not. It's an impossibility by the rules of Elliott wave theory. So we know we're not doing a trend to the upside according to Elliott wave theory, but we are above the 200 EMA and the 50 EMA on the short time frames. But again, these are just moving averages, which you would expect since prices surged after a bit of a dump to the downside, that over a period of time, you're going to be above the 200 EMA and the 50 EMA. So confidence, maybe, possibly, but I think for the most part, it doesn't matter how much higher we push here. At some point, we're probably going to have to revisit the 20K area to fill that gap out. And I think, you know, this next move to the downside, whether it is a new lower low, which I would hypothesize we probably will because the whales haven't been able to participate yet, I would anticipate we do have to have a new lower low. But even parking the idea that the bottom is in, we still have to have a corrective retracement. We can't just continue this move to the upside. So I'm expecting to see some discounts, pretty decent ones to the downside at some point. Now, our daily chart is overbought here, or just coming out of this overbought area, so there's a big corrective action coming from the daily, but there's also a big corrective action coming from the weekly. Here's 2 other weekly fair value gaps. If I scale this out, there's no other gaps on this entire price chart. So we have to reflect and understand what that means, right? That means that all these other institutional-based candles in the history of Bitcoin from September 2017, okay, so all these other institutional candles from 2017 have been filled. We've come back down and filled them, right? There's no other fair value gaps left behind on this chart. And I can draw several of these in, right? You can argue with me until you're blue in the face about these things. Essentially that, you know, it's only because of X, Y, and Z that we actually moved down there. It was only because of this that happened, right? And sure, you could look at it through that lens if you want, or you could look at it through the lens of, well, something is going to happen that's going to get us down into these ranges, right? And I can keep drawing these on because they're everywhere. I can see them here as well. In fact, this one, hasn't actually been hit, but hasn't been filled. It's an interesting one right there, actually. 14K. That's the number that I've been calling out for a while. This one right in here, this one's been filled. It took a while, but we filled it, right? And there's a couple others. There's one right over here. This was actually filled out within a few months. If I can get it, can I? Oh, I'm going to just pull it across there. So you can kind of see that we have these gaps that get left behind, right? So over here, gap was left, we pushed up, we fell back down. Yes, it took a pandemic to get there, right? Sure. something was going to happen to get you down there. This one also kind of tapped into, then filled it. This one filled it pretty quickly. This one hasn't actually been filled yet. I don't know why that hasn't been drawn on. This one was filled, took a while, but it got filled. This one got filled, and so forth. So these two over here, what do you think? Do you think they're going to get filled? I do. And these, unfortunately, on the weekly time frame are significantly lower. 17k on the low side. Not a new lower low, but lower nonetheless. This one, coincidentally, just drawn on here. I haven't actually got that quite right. Let me just get that onto that one. There we go. It's quite thin, but a candle nonetheless. 14,100 to 14,805. I would expect that to get filled out. We can also argue there's a fraction lower here. I'm not sure why this indicator doesn't want to just mark them all up for me. I find that very frustrating. But other than that, I think those have got filled out over there. Those have got filled out. Yeah, we're pretty good there. So this on the lower side would be 11,720 to 12,765, right? So we know that there's room down here and some gaps that have been left behind, and these have a tendency to getting filled out. So we can see also that this move upwards also filled this gap, where we saw this one right here. So we had this candle formation and it got filled out. Right, so we know that they happen, and price loves to go back into it. It's not a guarantee, it's just something that we notice within the data. So let me go ahead and remove all these, because otherwise I'll just make a mess of the chart. But you get the idea, right? We have these gaps, right? And we see that. Elliott wave theory shows no trend. We also see that there's institutional manipulation going on here with big purchases dragging that price to the upside. And we also can see that really FOMOing and liquidity being provided from retail investors isn't looking overly promising either. So with all these things coming out, we can kind of then take a look at our macro picture and think, okay, well, where are we? Well, we're right up inside the demand zone, supply zone. So if we look at the previous bull market from 2021, this is an area that we went through, we came back down, tested it, and it turned it into a support range or a demand range. This is basically where buyers were. We come back down in May 2022, we tap into this range and we bounce up from it, again confirming that it is an area of demand. We lost it as our demand zone, as in we just chewed through all those buy orders as price tanked down into the June lows. We come right the way back up to it. Is it now a supply zone? So what was previously an area where people were buying could be an area where people are selling. Think of it this way. If you were thinking that this is a good, strong area of support, and you bought Bitcoin on a spot order right here, all of a sudden, you got trapped into your position, right? All of this was trapping you into your position. You're holding this Bitcoin, you're stuck with it for now, right? You're right back up to where you bought it. What are you going to do? Are you going to cash out your money? You're now back at value. You bought it and it's right back to where it was previously. That could be an area where you think, okay, it's time to get out. I finally got all my money back. If you didn't sell at the lows and you rode it back up again, now is the time that you might be thinking, should I sell? Okay, that's why you see this as a supply zone. Previous demand turns to supply because the psychology behind it is you bought it back here, you've lost all that money, it's come right back up, you finally got all your money back. The gamble is there. Do you stick with it, thinking that you're going to the moon, or do you come out and wait for those deeper, cheaper prices later? Okay, so you find that demand zones turn into supply zones because of the psychology and the emotional reactions that retail investors have when you reach these rare areas. So all in all, it's looking interesting, right? So I've rambled on a lot here in this video. There's a lot of stuff that goes on in the background, and I don't think it's as simple as us going ahead and going, look, we've got this trend up here. We're going to the moon. We're bouncing from it. It's fantastic. Or worse still, right? There's some people might even be thinking, look, we're going up into higher highs and higher lows. It's bullish as F. We're going to the moon. And unfortunately, that's not how this shit works. I go through this a lot. I don't know if I've got it on. Yeah, I've got it on here, right? You see all these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. They always have a tendency to break to. I say they have a tendency to break to. They're not always. They have a tendency to break to the downside, right? And so if we're doing this here, we're in this higher high, higher low situation, and it doesn't tend to fare too well. So we should consider the fact that higher highs and higher lows have a tendency to break down, whereas in a bullish market, it's the other way around, right? And these would be more like bull flags, essentially, right? Lower lows and lower highs break upwards. Higher highs, higher lows break downwards, right? And we can see it right in here on the charts. You can see very clearly the different scale of these things, right? You have the larger ones that get these break upwards. Obviously, the pandemic crash did actually kind of alter that after a little bit of a rally upwards, but nonetheless, you're there. And the bigger ones here, you can see these kind of bigger moves upwards, right? So if we're here, we either think to ourselves, are we getting that breakout or are we not getting that breakout? And even if we are, right, and we have this low from the bear market and we break upwards, there's always a retracement down. It's always a nice retracement down. So I'll leave it there. Let me know what your thoughts are in the comments below. I've kind of rambled on for a lot of this. If you found it useful, smash the like button. If you're new, subscribe, join us down in Discord. And guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.